Hey, there we go. Okay. Good morning, everybody. How are you all doing? Let's pop out the chat. If you're here, say hello. We shall begin soon. Jambi, welcome. Cakezilla in the house, welcome. Nuno Ferreira, back to the charts after vacations. What a nice start to the week. Yes. I'm doing good. I'm like, yeah. I'm doing good. I haven't really been looking at the charts a lot recently. So yeah, my chart's really basic. So we're going to start off kind of from scratch. The last couple of trades are taken. This today is like hit target for those. So that's nice. That's a good thing. And the update that I did yesterday for the crew, essentially looking at it coming up towards these monthly highs again, basically. And we are getting that move up now, which is good to see. So I'll cover that in the video. We'll have a look at where things are at. I just deleted everything every now and again. It's good just to remove everything from the charts, start to look fresh at where price is. And especially when things have been relatively quiet like they have been recently. But I think we do have some stuff that we can be talking about today. So we'll get into it. It's just a nice way to get back into the flow of things. I'm going to sneeze again. But yeah, at the moment I've been trading a lot less. You guys know that anyway. And I've got a lot of stuff to be sorting out for the whole move and all that kind of thing. So that's like basically just occupying my mind all the time at the moment. Can't wait to get out of here. Get on to doing more exciting things. And then I'll be able to feel a lot better when I'm streaming. And stream a lot more often as well. Anyway, coffee. Good morning, everybody. Actually, it disappears if I move it out of the... Look. Invisible coffee. And now it's visible coffee. It's invisible. It's visible. Nene, welcome. Arati, welcome. Okay, right. What we're going to do... We're going to do a little bit of top down on Bitcoin just to begin with. Do I record this? I'll record afterwards. So, important levels. Let's just do it on the Coinbase chart. Monthly open. That's monthly low. Monthly open. I don't like these when they're being so... I need to change my presets. More opaque. No, less opaque. More opaque. Whatever it means. Weekly open. And daily opens up here. Bull market. ZK, what looks like shit? What looks like shit? So that was the 4-hour OB. Oh, we got the nice bounce yesterday. This is where we're at now. Just caught on this one. Charts look like shit. I disagree. I mean, it's ridiculous, right? Do I have another one of those rants? Like, all the fucking silly sausages that have been calling for a recession when we had all of this FUD. And like, look at the NASDAQ. It's like 2 good days away from another new all-time high. And the ES, it's like 1 good day away from another all-time high. Yeah. I mean, think about all the people that sold down here. Insane. Now, Bitcoin takes a bit of time to catch up, but this is normal. It catches up. It catches up. It always does. It does lag behind the legacy markets. What we saw from the NASDAQ and from the ES a few weeks back in July, was they topped at very, very technical levels, 1.618 macro. Yeah. We had spoken about this on stream. All right. SPX topped 1.618 macro. Where did it find support? Back where there's previous resistance. NASDAQ topped at the 1.618 on the macro. That's from the last cycle. Okay. It's normal. Normal that we'd get a correction from there. Very much normal. It then took a few weeks for Bitcoin to start to follow it down. It's the same thing. Just lagging behind. I think we're all good. But I still don't think we're going to be seeing anything significant until mid to end September, early October. But if they want to start ramping things up now, then they can do. And this is probably, I think there's potential. I don't think this is going to happen yet. I think we're still a few weeks away from it. But remember, the candle that we're looking for is the one that looks like this. Yeah, the one from back in October of last year. And that's when you start to get seriously back into trading again. That's when we're going to get the volatility picking up. That's when everything is going to start looking good. It's going to happen. All right. We're not going lower, in my opinion. And I still am fairly confident about that. And if we do, I consider it to be a gift. Like I said on the previous stream, I would prefer if it did go lower. I honestly would prefer if it did go lower, but I just do not see a situation where that seems very likely. But yeah, what we're waiting for, essentially, and I think this can chop around and do a bit more like nonsense and just boringness for a while. But we're just looking for that candle that just breaks it. And that's when you get back in again. But of course, anything can happen. It's just my opinion. Yeah, still that I think this range does resolve up eventually. Now, by this range, okay, we're still in this range, yeah? And as long as we are still within this range that we've been in since forever and ever and ever and ever and ever, then I do eventually think it resolves up. All right? And we are in it. So wicks below, okay, are fine. And that's all we're really getting. And there's a lot of liquidity above. Okay? It's going that way when this resolves. It's accumulation. Hopefully. Hopefully. I mean, you clown the NQ bears, but you called indices low when we were still above 1800. I mean, what do you mean when we were still above 1800? Yeah, I mean, yeah. I mean, it dipped below 1800 for a day. One day. It's a correction. It's a correction. I saw the basic strategy that surpassed all others like DCA, etc. is simply to buy corrections on BTC. Yeah. Yeah, I mean, I would never DCA into anything. Because that's otherwise why would you do TA? You look for good entries. But 500 points is massive on NQ contracts. Yeah, I mean, overall on the macro, it really doesn't matter, right? Because you trade it day by day. Your stuff gets closed out at the end of the day. But yeah, I mean, it's cool. I still just believe that it's a correction. And it's not like, I mean, of course things can go down like they did on Bitcoin and stuff, but it's what makes me laugh. And the things that I then like start ranting on stream about is that the bears only come out when it's dumping down here. I'm like, mate, that's not the time to be bearish, right? It's not the time to be bearish. The time to be bearish is when we were saying that it's going to correct when it hit the 618. That's when you're bearish. And the fact that it comes down here to 1800 and dips below for a day, and we're like, that looks like a good buy because it's taken out this low, insignificant. You don't have to time things perfectly. Because we can let's look at Tesla, for example, okay? I bought it maybe a little bit early when it took these lows. You spend a few days below there, but it's on its way back up again. You don't have to be perfect. You don't have to be perfect with it. Okay, anyway, let's get into the serious TA stuff. Because I always just focus on the chat. And that's a 20% stop loss, hard to get size on them. There's a difference, yeah. I'm talking about positioning and overall cycles. But I understand what you mean. Okay, so the move up that we're having right now. So if I look on this, I did an update yesterday for the crew. Let me bring this up over here. And because my Discord only loads, there we go. So yeah, I did this update yesterday for the crew. And we're just looking at, essentially, we were looking for the move up. Okay, so still in the trades from last week, where, I mean, yesterday it came back roughly to around about that entry, but still looking for the move up overall. Altcoins haven't really been doing it very much. They didn't share too much on there. But I did take a trade on tier. So we'll check out tier in a moment. And then we'll have a look at some other stuff as well. Also, massive shout out to the legacy chat again today. Look at that. Big money being made over in the legacy chat. So Cake did his live session this morning, just before I went live. So 8 a.m. London trading room for the NQ. So not talking about crypto because crypto's not doing very much, but discussing the NQ. And yeah, another very, very profitable day for everyone that was trading over there. So congratulations, especially to Trowley, who's made, what's that, like $6,000 today? $6,000 in an hour. Less than that in like 2 or 3 trades. Pretty crazy. So yeah, well done to Trowley. We'll get back into this though. When do you think the bull market might be over? okay, let me go into the BTC stuff and then we'll discuss that. Because I think what's happened recently has been pretty healthy and pretty much needed. But yeah, we will. Just join the crew and copy trade me like Charlie. See, that's what happens when you join the crew and you copy the coaches. I mean, we run through our setups. We had the long on Bitcoin, profit. We had the long on TIA, profit. Traded the NQ this morning, profit. All you need to do is join the crew, copy it. I mean, sometimes we lose, but that's why you have a stop loss in place. And that's why you manage your risk. It's a good thing to do. That's why we put in the work, so you guys don't have to. Literally. I mean, you do still need to put in the work, obviously. But that's why we put in more work, because we take a little bit of the weight off of your shoulders. Find the good setups, find the good trades. They're few and far between when it comes to crypto, which is even more important. That's when you get the good setups, you got to fucking take them, right? You just got to go for them. All right, let me just stop the music briefly. I'm going to attempt this. And we're just going to do the little Bitcoin update. Good morning or afternoon or whatever time it is there, traders. It's the 20th of August, Tuesday the 20th of August. This is a Bitcoin update for you. We have a little bit of movement again on the chart, so something to discuss. A nice move up today. But yeah, this is just to go over a little bit of an update of where we are now and where we can maybe expect to be going over the course of the next few days, weeks, months, whatever. So yeah, stay tuned, hit the like button, hit subscribe, do all of those kind of things, and we'll get straight into it. So first of all, we'll just do a little bit of top-down analysis here. So the monthly chart is at the moment looking relatively healthy. Okay, what we did, of course, so far this month was we filled the gap on the monthly. So the imbalance corrected. This came back to test those January highs. I didn't think it was that long ago. The January highs when we had the ETF launch, and has had a really, really strong bounce since then. Now, what would confirm this to me to be uber bullish once again is if we do get a monthly close that's back inside these candle bodies. Okay, these monthly bodies representing the range that we've been in for the last few months, for the last quarter or two. And if there is to be a monthly close that's back inside there, I know there's still a few more days left of the month to go, 10 more days, 11 more days, however many more days it is, then I would consider that to be pretty strong. And we are looking for probably, I would say, breakout September, October. I have said that is the most likely scenario, in my opinion. For quite some time now, we've been looking at September, October, for the move higher. I mean, I said this on a video that I released on the 1st of January that we'd have a bullish Q1, correct, and then continue in Q4. So everything would look good for that. Okay, we have corrected the imbalance. We're back inside the range, and things are looking relatively healthy there. So no need to be bearish about looking like considerably lower unless we start getting closes and acceptance below the imbalance that we formed on the chart here. So that's back through the gap below 50k. That would when you have to look at this being probably macro top bear market situation. But for that to happen, you need to get acceptance below 50k, and we're simply not seeing that. You bring that down to the weekly. All right, one thing that I said when we did have this dip a couple of weeks ago is that we wanted to see a weekly close back inside the range. Okay, we got the weekly close back inside the range, and we actually had the weekly close that was above the previous week lows, and we have been managing to hold that. Then you go down onto the daily, and okay, it was a similar situation. Okay, even on the day that we had the drop, you had the daily close that was back inside the range. There was no acceptance of price lower than this. It was simply a capitulation, simply wiped out traders, and now we're still trading within the same range that we have been doing for quite some time. And if you zoom out, it looks like a bit of a bull flag, right? So it's not the kind of thing that I like to trade, but a bit of a bull flag going on. And you can say the same thing about the structure that is being formed here, okay? You've had the move up, you're flagging. The likelihood is we are going to continue a little bit higher as we go on into the end of the week, especially with equities looking fairly strong at the moment as well. However, we are at some resistance. We do have this little mini range at the moment. So the last trade that I actually took on Bitcoin was last Friday, and that was a long after we filled the single print. So I'll zoom out a little bit there. We had that retest of it yesterday. Okay, we had the decent move up over the weekend, came back in, tested into that, and now we finally hit target. So this was the trade. This was what we were looking to see filled. When we go down onto the 30-minute time frame here, we can see the entry. All right. This is where we went long. We also had an untapped daily level there. So if I just add the daily level, it was the previous day open. Where was it? It was on this day, wasn't it? Which day was it? Friday. It was here. Okay. Go back onto the 30-minute time frame. What did we do? Okay. We had the move down that hit your previous day open. Okay, zoom in a little bit more. Hit your previous day open. Immediate bounce, all right, to take liquidity at the highs. Okay, I did actually take profit on this very quickly when we had that first spike up, but then we're still holding the rest of that trade afterwards. Then, of course, we had the move back down, just testing into the same kind of zone again yesterday. Once again, what did this do? It filled the single print that was left behind. Okay, filled it there, traded through it, reclaimed, and then on we go towards these highs again. And now where we find ourselves is back towards the top of the range. Okay, we are just doing a general rotation. What you tend to do when price is in a range like this, you just trade from balance to imbalance. And I repeat this all the time. It's all about where's the balance, where's the imbalance. Okay, any moves in any direction at the moment are getting recovered or retraced. That's just how the market is behaving right now. So what I would expect at the moment is, okay, what we expected from the move up was to correct this. Okay, you see large impulse down that gets continuation. Okay, you're looking for the initial bounce. What did it do? It corrected this, and then you get that continuation further there. And every time we create these little gaps, these little imbalances, they are getting retraced and recovered, which brings me on to probably the next trade that we're looking at now, which at the moment probably looks like a better short. Okay, because what has this done on this move up? You see acceptance, balance here, price just trading around, correcting everything as it goes along, and then you impulse on the daily open. So whether that happens today or in a couple of days' time, tomorrow, next day, whatever it is, this move here, this daily level, this daily open that's currently our daily open is likely to get retested, very likely, because that is what we've been doing consistently. Okay, we did it back here, where on the following day, you tested it. So what could we see today? Maybe a bit more of a move up. And the following day, you come back down, you test it. But overall, I still believe that this has enough in it to be seeing a bit more of a floaty, steady move up over the course of the next few weeks that can lead us to a breakout in September or October. So that's essentially what we're looking at the moment. Now, if I was to, because I'm in these longs, I have taken profit on them. I do think that this could go a little bit higher, all right? And although I do think we're going to be coming back down here at some point, I do believe that this has a little bit more in it, probably enough to get people bullish again, essentially. So let's continue with these longs, look for the long positions to take out some of these highs, to start to run those stops. And then what we have over here, it's taken some time to get there, but is that monthly open level. And once again, we've got those single prints, that gap that has formed from all the way back in the beginning of the month here that I would expect to see this continue on to. So that's kind of essentially what I'm looking at the moment. I do think we can see a bit more continuation first, Then I believe if we do get that continuation, I would 100% be looking for those short positions around about that monthly open. Okay, be aware it could SFP these highs. Okay, we do have a bit of a double top situation over there. They are the monthly highs. It could put in a new high for the month. But they're levels to be looking at as and when we get there. But it is that monthly open. It is those monthly highs that I would be looking for shorts to take things back down to fill any gaps that we've have left behind previously, because that is just what the market is doing right now. It's just, I mean, it's very, very boring, but it's very, very efficient. Okay. It's not doing anything too crazy. Okay. Anything that it does do, it's just returning back to where it started again. And we just have to be, that's why you just have to be very diligent with taking profits quickly. Don't hold on to trades for too long, because they will round trip, and they just continuously round trip. Whether you're holding short from here, it's now been round tripped. If you're holding long from like daily open, at some stage, you're probably going to round trip it. So be very diligent with taking profits. Make sure you're taking profits quickly and often, and just focus on those single trades where the good opportunities come. So yeah, those are kind of the main levels. I'd say, like, if we look at 2 zones on the chart, you got a nice buy if there is to be a test of the daily open, which will just become an untapped daily level, and then sell if you come up to the monthly open. All right. It looks relatively simple from here, whether we're to do something like this and then we make the move higher, or whether we are going to see some continuation higher before the move down that brings us back into the range. Either way, I think those are 2 levels that you can be looking to trade. Is there anything else that we really have to say on this? I don't have XO open. Whoops. But if I load the session volume profile on here, NPOCs. So this being the weekly open yesterday, yeah, there is the NPOC left behind here that takes us back in towards that weekly open. So once again, that's something to be aware of. You can see again here how efficient the market is. NPOCs are not being left behind, and when they are tapped, they are getting reactions more often than not. All right, we can see even from the bounce, that first bounce that we had from all the way back at the beginning of the month, what did it hit? It was the naked point of control. Okay. Before we got that rejection and correction, it was the highest point that it really could do without changing market structure and being bullish again. But where are these other levels on the chart? They are from those naked points of control. Once again here. So those are the areas of balance that you have to trade with. And then, of course, the gaps, the fair value gaps, the impulse candles, these kind of things. Those are the areas of imbalance that we have to trade from. So you're trading balance and imbalance just consistently. And yeah, it tends to be getting some pretty decent results at the moment. There's nothing really more for me to say on this one. I think we've probably wrapped it up. I'm not going to go over all of the ETF nonsense and CVD nonsense and all of that. Volume is dead, so you can't actually read anything into the order flow right now. I did see quite a few people yesterday on crypto Twitter talking about Binance. Some guy on Binance apparently shorted $500 million of Bitcoin at the lows. It was probably just Binance, right? It probably wasn't some guy trading that much size, because there isn't those guys trading that much size right now. It just isn't happening. It is a very quiet market. If you got money, you're probably on holiday. So that's why we're still expecting just not very much to happen. It is going to be the exchanges that are just moving this around and just keeping things steady for now. So yeah, on that note, I'm going to wrap it up here, and yeah, have a great day. Don't give up on trading. I know these times are tough. I know they're very, very boring, and I'm extremely bored by them as well. But keep going at it. Keep the grind up. It's tough, but the reward will be there, because I do believe that we are going to be continuing to see another leg within this cycle. And that's probably what we're going to discuss next on this part of the stream. So if you want to listen to that part of the stream, then rewatch the stream or join the streams. I'm trying to stream as often as I can in the mornings at the moment. Sometimes there's nothing to discuss, so I don't. But because we had a bit of a move today, then I'm here. So thank you very much for watching, and I'll see you in the next video. Cheers. Bye-bye. Whoa, this is strong coffee. Strong coffee. Let me upload this video. Hey, we got over 50 people viewing today. I mean, it's not quite 200 or 300 like we used to get in the bull market phase, but at least there's some people. At least there's some people here again. Right. Let me just get this video uploaded before I forget. Upload video. "13 minutes. Is that the right one? Was it 13 minutes long? I actually thought it went longer than 13 minutes. I thought it said 17 minutes. I hope this has not been clipped. Oh, don't do the verify it's me thing, YouTube. Stupid thing. I don't need to verify it's me. It's clearly me. I hope no one is keylogging my keyboard right now. Verify it's you. Check your device. Yes, that is the number that is on the screen. Yes, it's me. That's the number. Thank you very much. Now I can upload the video. Ah! Hooray. Reuse. I'll get to the questions in a second. Thumbnail. Bitcoin bulls are back. Yeah, that one looks good. That's a good thumbnail. That's what we want. Clickbaity. No, this does not have any... I mean, it does have inappropriate language in it somewhere, probably, but I'm going to say that it doesn't, because I don't care. Public. Publish! Oh, let me put it on X also. Man, I'm so out of practice. So out of practice with streaming and YouTubing and uploading and stuff. Publish. Good. Video uploaded. Right, what were the questions? Let me go back to... okay, we got to this. So Arati says probably some rally in anticipation of Fed cut, then dump. Yeah. So I mean, Fed cut is known. Okay, we know it's happening, and what's going to happen soon after the Fed cut is that the election is going to really start hotting up significantly. So if I have touched upon this again in other streams, and we're probably better suited going over onto, let's say, the SPX chart here. Okay, we look at where things are at right now on the S&P. I would be surprised to see this come back down again. At this stage, generally speaking, once you've had a correction and you've recovered it, it's the S&P, guys. It's the US markets. They don't come back again. You don't really get these, like, when we're in this kind of move, it should just continue. Okay, it wiped everyone out. Now it keeps going. If we're looking at the cuts in September, yeah, I think that can probably cause a little bit of a correction again, but I don't think it's necessarily going to be like the massive sell the news event, because of how close it comes to the election and what we're seeing with the election. So what we may see is, okay, we know the rates are happening, so market probably just continues to come up for a little bit until then. Rate cut gets announced. What we would probably, or what I would be looking to trade first of all is, I think it will be a sell the news event in a way, but I would look for it to spike up quickly and stop people out, similar to what happened with the ETF when that launched. Is, remember, the very first day that we had it broke highs. Okay, it went up a lot, and then we pulled back afterwards. So you'd look for a spike up, and then you'd start to look for the correction and the opportunities to buy. I don't think that will be a deep correction because, as I said, we've got the election hype that's going to start to come in after that. Now, the elections when things get really, really interesting, because we don't know right now whether it's going to be Trump or Camel Toe, Camilla, or whatever her name is. So if we're getting like Trump wins, I think what we can probably expect to see from the market is big move up, okay, after the Trump election, but at some stage that's going to top out and you're likely to come back and revisit that time when Trump was elected again. It's not going to be like, it'll be one of those situations maybe, I'm saying it will, I'm saying I think it could be. Like if we're looking at a Trump win, I'd expect the rally to continue for a few months, but obviously you'd still get like a big wipeout at some stage, because a lot of this will be hype. Okay, you'll have that little bull market hype rally, bubble will burst, and then you'll come back into it, but then I still think you can continue on afterwards. All right, so it's going to be one of those situations, maybe similar to what we saw from Ethereum, not from Ethereum, from Bitcoin back in the previous cycle, where if we get like a Trump election win, I kind of have this in my mind that I'd be looking to play it something similar to what we did back before the last bull market, where you have the Trump win, okay, you put in a distribution, you come back to take everyone out that got in too early, thinking that Trump's going to be super bullish for the market and all of that, and then you go for the big run afterwards. So for a Trump win, we're looking at like this kind of fractal across like most stuff. Now, again, I'm just playing with ideas here. This is just like how I would be looking to trade it. So if you're like, you have a Trump win, all right, you're looking at something a little bit like this, move up, correct, and then continuation afterwards. Now, if Camilla, whatever her name is, wins, I think we initially get a pretty big sell-off. So Trump will be like, bah, 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 boom, and then continue on. If other woman, silly woman wins, then sell-off, but I think that will be a bear trap and you'll still continue on as normal anyway for a while, because that's just simply the market and that's where the money is. So I wouldn't be looking at anything like where, like I don't think if Trump loses the election, I don't think it's going to be bearish. Okay. I think the market will do what the market will do. And the market looks like it's got another until next spring, summer of upside left in it. Okay. And that probably takes us to technical levels. All right. Technical levels for like a bigger macro top around about that 6,200 on the S&P. All right, where you would look for this to get a continuation towards the 2. It has done that historically before, and that's probably where we would look for the next correction. So you got a bit of time to look for that next corrective move. I do believe that we can and will continue higher over the course of the next few months when it comes to equities. And I think we'll probably end up seeing something very similar on Bitcoin or within crypto. If Trump gets elected, okay, it's obviously going to cause a massive pump across the board, but it's going to get retested, okay? So if it creates a massive pump across the board and Trump gets elected, don't FOMO into it. Just wait for it to come back down and then get in, because it will probably continue higher afterwards, yeah? And if Kamala gets elected, probably just buy the dip, because I think markets will just go up anyway, regardless of what happens, okay? They're not like, it's not going to mean that it's immediately bearish if what's-her-face comes in and Gary Gensler becomes the new Jerome Powell or whatever like that. All of that stuff will just make the bear market worse when it eventually comes around, and it will come around. So yeah, that's a little bit of, a little bit of a rant, or just some stuff that I've been thinking about recently about how I would like to play it, depending on the outcome of either situation, because it is going to be a big thing. What else is on there? When do you think the bull market might be over, Tony? So yeah, I would probably want to be out of the market by next spring, summer, regardless of what happens. Now, we did have this argument about the big like left translated cycle that we've had recently, where we made a new all-time high before the halving. That had never happened before. Okay, previous halving, it was back here. All right. But what this range has done by continuing on and by correcting by the amount that it has is it's almost corrected that left translated cycle theory that was previously there. Because if we do look at where we are now, all right, the halvings were roughly the same time. They were both in May. Okay, so if we do look at where we are now with that like post-halving bit of a range that was put in down here, it's probably be easier if I just put it onto log, right? The post-halving range that was put in over here, we're getting to that time where this was naturally breaking to new all-time highs anyway. Now this is doing something similar, right? We've had this like big post-halving range that's happened, okay? But there's now acceptance back below there. So if we were, say, at 50 to 60K around this phase of the cycle, all right, I don't think anyone would be thinking that that was unusual. The reason people have maybe been more caught out is because we made that new all-time high first. We had the ETF hype, but I think that's mainly corrected it. We've gone back and we've returned back to a level where you could reasonably have expected price to have been at this stage in the cycle. Yeah? Like if this had just done this, okay, if we hadn't had the whole ETF hype and we were here right now and we'd done something like this and we were there, no one would be questioning it, right? Nobody would. I mean, it would be more like this, wouldn't it? It would be like, here's your range. What people are questioning is the fact that we did breach that all-time high, first of all. But I don't think it makes too much of a difference. So I still believe we've got the big markup phase left to go in the market, which is going to take things that will end up looking a little bit like this, okay? Yeah. All right. The chances are we're going to be seeing quite a lot higher. Yeah. And that's from the last cycle, so who knows where that ends up. But that's what I believe. But I'd be looking to start to get myself out of that by next spring, summer, because the timings are right. Okay, we saw that this happened previously. All right, where you get a good like few months of markup afterwards. Then, of course, it made another high after that. And this was this was a bit of a forced correction in a way. This one, that like weird double top that we had in the previous cycle, but again, because it was so explosive on the way up, it had that correction and then made that other high afterwards. So yeah, I mean everything's following fairly similar to what it's done in previous cycles. So the timings of it will probably remain roughly the same. Yeah. What do you think about the Wyckoff accumulation that we have? Yeah, absolutely. I still believe that we're within accumulation here. The thing that I got wrong is I believe that this was the spring, so therefore I positioned myself for that to be the spring and for it to hold above what would have been that anchored view up there. And I was thinking, okay, maybe we can just hold this for some time and then get a breakout. But I think the timing situation of it, actually looking at this back in hindsight, we kept having this thing about like saying, all right, we're not going to get a move until September, October. We're not going to get a move until September, October. We just didn't think that was going to happen. But then because we had this drop in July, like, I mean, it almost had to, from a time perspective, stay here. Like, you're not just going to do this for a month or two, are you? It's like unlikely, okay, before breaking out. So yeah, the thing that I got wrong, I still believe that it's accumulation, and we are seeing springs, okay, within the accumulation, so good opportunities to buy. But I think from the time perspective, we had that like a bit of that time capitulation here, which was needed, and now we're getting that time and price one where we're getting that like ramping up kind of effect going on. But that's why I do believe that eventually this does resolve up. Okay, it's looking pretty bullish here, and we would be looking for well in excess of 100k as we go towards the end of the year and onto next year. So yeah, absolutely not thinking things are bearish, but right now is just not the time for me to be participating too much in trading this like crazy. Okay, I've bought the dips. All right, I bought both dips. I have positions that I'm like okay with, but I wouldn't be looking to get too much more into it. For the main reason that the fact that when this does start to break higher, it's probably going to drag altcoins, BTC pairings down a little bit with it anyway. So the time it seems silly, but I would rather be involved when we have volatility after a breakout back in like trading this, properly trading the momentum. I'd rather be involved in the market when we're actually on that move up, and when everything's moving together, rather than trying to like force it here. I know you get better prices here, but we don't really need the better prices. We just need volatility in order to trade. Volatility is what is needed. It doesn't matter how low you're buying stuff. So we just wait for the volatility really, and it's not really there right now. So yeah. Question: if someone holds mainly Apple and Tesla stocks, how would you recommend balancing between the two? I feel like they will have a lot of upside. Can't see Apple doubling while Tesla could 2 to 3x. Yeah, I don't really do stocks very much. I have stocks, and I don't really tend to like sell them too much. Apple is Apple. Like, you're always going to be fine with Apple. They're not going anywhere. They're just becoming better, bigger and better still. I mean, there's something that can be said with, I think maybe the mobile phone market is slowing. People are keeping hold of their phones for longer. People aren't upgrading as quickly as they used to. Is that going to cause Apple stock to top out somewhere and things slow down? But then they seem to have the laptop and the iPad market on lock as well. What they're doing with their new chips and stuff is really good. I don't know, but Apple's Apple. It's all good, but I wouldn't be like looking to buy more Apple stock where it is now. Whereas Tesla, I think, yeah, Tesla looks like probably the outlier in terms of opportunity for the market. Yeah, so if I was wanting to go like balls deep into something, like any asset, Tesla would probably still be the one, because once again, Tesla ain't going nowhere. They're not going anywhere. All right. And Elon's not going anywhere. So Tesla to me looks like a steal. I bought it $180 when we had that first drop down. Okay, it went a little bit lower. I bought it again at $180 when it retested. And I, absolutely believe this can like 3, 4, 5x easy over the course of the next year or so. So Tesla's the outlier. Okay, it's the one that hasn't been performing as well as the others, but that's a really good thing in my opinion, because if you've got a good company that's undervalued, that's where the opportunity lies. Like you look at Nvidia, you got a good company, but it's clearly not undervalued anymore. Yeah, when it was undervalued was when we were buying it back at what was then $110, what now is $11. And that is where I was buying Nvidia, and now we're 10x up from there. So, yeah, I think Tesla looks like a similar opportunity right now to what we had with Nvidia back here. That is all I have to say. Peace Puffs. What island are you moving to, Luke? Any surf? I'm going to Bali first. So if there's anyone in Bali, then come and say hello. I'm going to spend a couple of months in Indonesia. So I'm going to do a month in Bali, and then I'm going to do a couple of weeks in Lombok and a couple of weeks in Java, and go through Java and go to Jakarta and do like the volcanoes in Java and stuff like that as well. So a couple of months there. Then I'm going to go to Thailand probably for 3 months after that. Basically, I'm just going around anywhere I want to go for as long as they'll have me. Essentially. So it's quite nice with as having a British passport. It means that like Bali, I can stay there for 60 days, no questions asked. Thailand, I can go there for 90 days, no questions asked. Vietnam, I can be there for 60 days, no questions asked. So it's just like nice and easy, just travel around and do that. Will you be trading from a laptop? Yes, I will. I will be living the digital nomad laptop life for the foreseeable. I mean, I've had 2 years of my like beastie big setup here. Like, it doesn't make you a better trader. It just traps you, literally traps you. If you have like a really, really good setup and like you have this like amazing home setup that I've got, I thought like this would be, this is amazing, this is so cool. But what it does is it means that like it prevents you from being able to like go out, go on holiday, trade from a laptop because you think you need this big beastie setup. You don't fucking need a big beastie setup. I can make my money, I can make just as much from like checking the charts every now and again and taking a trade on my phone. Right? But it makes you think, puts you into this false sense of like insecurity that you need all these screens and everything to do it. Nah. Just traps you. Don't fall for the trap. Don't get yourself like the big home setup, because then you never leave your home and you get really pissed off. Yeah. Thailand are dropping a 5-year nomad visa at the moment. You have to leave every 6 months, but get another 6 months for 5 years. Nice. Yeah, I mean, for now, I'm just going to do everywhere. So I'm going to go for as long as I can stay in each country without getting a visa. So, yeah, like I say, that's like 60 days for Bali, 90 days for Thailand, 60 days, I think, for Vietnam, 90 days, I think, for Japan, 60 days, I think, for Korea, only 30 days for China, but it's China. And, then I'll probably do, like, other places as well. Maybe go to Australia for a bit, New Zealand, South America. I don't know. We'll see what happens. We'll see what happens. Which country are you looking forward to visit the most? Well, the ones that I've done all the research for so far is Bali and Thailand. So I have a really good idea and a really good understanding of where I'm going to be when I'm in Bali, when I'm in Thailand. I'm also like massively excited about Japan and Korea because I think those places are awesome. But we'll see. That's why I want to travel around, because I don't really have like too much expectation for it. I'm just going to have my laptop with me. I'll still be working. All right. I'll still be working. I'm not going anywhere. But the fact of the matter is, and this is actually, I'm going to do a video on this, I think, before I leave. Like, you can, for everything you make, like from trading, and I mean, trading, it changed my life. Yeah. So trading did change my life. I got into trading because I had to, basically. I used to work in music. I got into trading. I was into crypto, and I knew technical analysis. I was learning technical analysis since 2017. But when I properly started trading it, that was during COVID. And I had absolutely no alternative. Like, I had nothing to fall back on. I had to make it work, and I did make it work. And then with that, like, suddenly I had money. I was like, oh, yeah, I got money. So what did I do with the money? Bought a house, living in a really cool apartment, buying a new car, doing all of those kind of things. But then what that did is you had like, it created a baseline, right? Whereby I made some money because I had low expenses, right? And then I made money during COVID because we were locked down in COVID. There was nothing else to do, so I was just trading. But then my baseline of expenses goes up massively, and then you have to trade just to survive at that point, which then is kind of sucky. Yeah. So other things that I did in order to stay surviving was try and build a business, try and expand, try and do other things. But none of those things have ever brought me any money. Like, doing this makes me nothing. So like, makes me like literally nothing, costs me money to do this. So it puts more pressure on trading, which I've then found has made trading less enjoyable for me over the past couple of years. Okay, because then I have a bigger baseline to try and maintain. So I'm not actually trading to like increase my net worth. Like, during COVID, it massively increased my net worth, and massively increased how much money I had. Now I just trade to like keep it there, and scaling is really quite difficult. So that's the thing that I've struggled with then. Like, I still am doing fine, but that's the thing that's made it more difficult. So I was like, so yeah, now I've just kind of thought, you know what? By being here, by being in London, it forces me, like, I have to trade just to be able to survive. And I don't really want that. I don't want to feel like I have to, because as soon as you have to do something just to survive, it takes out the enjoyment of it and all of that. So yeah, the thing for me is like, I get a lot of enjoyment from traveling around, from seeing the world, from doing all of those kind of things. So if I'm then bringing my baseline back down, okay, it's going to be cheaper for me to travel than it is to stay where I am now. Then I can start to enjoy it more. I can start to relax a little bit. Okay, I'm not forcing myself to just look at the charts and stress myself out. I mean, it's not stressful, but you get burnt out real quick when you're not, like, when there's no balance there. So I haven't had the balance for a while. So now what this is doing is just bringing it back into balance, and then you can work again from a new little base, which would be good. So just some like realistic stuff for things that I've learned from trading. Okay, did well from it, but it's so much harder. And you'll see this is why people do cycles. They'll make a load of money in crypto and they'll give it all back. Luckily, I've not been one of those guys. But it's so much harder to maintain wealth than it is to get it in the first place. Because to maintain it, think of all the hard work that you had to put in to get money in the first place, and then you've got to do that as the bare minimum just to maintain it, and then you've got to keep on going and going and going and going. So it's a weird one, and it's something that I've learned a lot from over the past few years, is like maintaining and still building. But yeah, that's that. But we're going to go into another part of the bull market, and then we're going to get the subscribers up, and then that's what gives me life, is when I'm doing something that has some kind of purpose. Because when you're just trading as well, like, there's no fucking purpose to it. And then it really, like, it makes me, like, sad when I do these streams and I get, like, 30 or 40 people watching. And I'm like, I know I love you guys, but, like, I want to share it with more people. So I want more subscribers, man. I want more people watching this stuff because I want to share it with more people. That's kind of how it is. But yeah, I'm going to be doing some cool stuff when I'm away. Going to be doing like travel content, switch things up a bit, have a bit of fun again. DeFi yields farming is really interesting for scaling. See, yeah, I mean, it is. It is, but then I kind of think it's pointless as well. Like, I still feel, I mean, if you can't trade and you're just like a buy and hold for the cycle kind of person, then getting that yield, staking, doing the DeFi stuff makes sense. But if I had, like, say 10K, I'd rather trade with all of that 10K than put 5K into getting yields, because you can still make more with 10K than you can with the 5K, and the 5K is not actually going to make that much. I quite like nodes, because that's just passive, isn't it? And it's, you're not putting anything in to get anything out. You've just bought the node and then it's done. But I don't know. Crypto's not really like... Is there much going on within DeFi right now? I don't even know. I don't even know. I'd imagine there's some really good yields to be had because the market's down so bad. Gas fees are so cheap, like the cheapest they've ever been. I'd imagine there's some pretty good stuff going on in DeFi, but I haven't been keeping up with it. He's more of a trader. Just catching up, to put my personal perspective in, when it comes to trading NQ, I personally believe a base of a nice setup and a strong routine will serve you a lot better, or it does for me. Yeah, I believed that for a while. But I get bored easily. So I guess it depends on the person. Like, yeah, it depends on who you are. Like, I can do routine for a while and then I just get, I get massively frustrated. But again, that's just who I am. I'm weird. I'm not, my brain isn't wired up like most people, so I don't care. I embrace it. Longing the VWAP, value area low of the range, 60,500. Yeah, okay, let's get back into this. So, VWAP. I mean, we've had the VWAP test and higher already. Yeah, I mean, if you sweep this low, run it beneath VWAP briefly and see what happens there. Could be something. Could be something. You would have thought because Asia put in the high and we've got levels above, New York would want to go and grab that as well. So yeah, I think there's probably a bit more in this move. I still believe there's a bit more in this move. I mean, I did the update, didn't I? So yeah, I still believe there's a bit more in this move. I'm thinking about what Cake said about having the base as well. So this is like something that I'm just like, there's not too much to discuss. I'm just talking. I like talking to you guys. I think, so what I found is having having a base is good up until a certain time, but just don't, like, for me, having a base and like being tied into contract and having a big setup there was good for a time, and I had like real good routine, I'd say, for about a year. So I had real good routine here for about a year. And then you get fed up, but then you can't leave and change the routine because you're kind of stuck in that routine. And this is the thing most people get like caught up in with a job. It's like trading goes from, you can create your own routine, right? But it's like having a job or having like a 9 to 5 for a year or something. You'd get sick of it. Okay, fine to begin with. Hey, yeah, great, we got money, it's a new job, happy days. But then you get sick of it. And that is the thing. Like, we trade because, like, I mean, most people here trade because they want a sense of freedom. Yeah, they don't want to be stuck in the 9 to 5, but you will impose that on yourself. It's not like, that's the thing with trading. You will impose that 9 to 5 on yourself if you're not careful, and you will become trapped in it. And that is the issue that I had, is I became trapped in it. I gave myself that, I mean, it was more than 9 to 5, like literally like 12, 14 hours every single day in front of the charts creating content. I had less freedom through doing this and through trading than I would have done if I had a normal job. And the problem is, when you get into that spiral, yeah, then you can trap yourself deeper and deeper and deeper and deeper into it. So at some point you just go, nope, do the opposite of that. So I'm going to be doing the opposite of that for a while. Then we'll strike the balance of, yeah, having a base is good. Yeah, having a nice setup's important. I've got a really nice mobile setup that I'll be taking around with me anyway. But yeah, just be careful. Like, be careful not to get trapped into the cycle of having to do more to maintain it. It's fine when you're growing. Yeah. Like, if you built a business and you've got the startup and it grows, like first couple of years first year of doing Taurus was great. But then when it stops growing, when bear market hits, tough. It's difficult. some life stuff on today's stream. I like trading New York only, ES, 4 or 5 hours a day. Yeah. Basically, my trading, how it has been for a while, is literally if there's a trade during the London session, I essentially will just check charts during the London session. If an alert goes off, I'll look for the trade. So I did that yesterday on the NQ. I took a little short. So I did that. And then if I'm feeling it, I'll trade the initial balance of New York. So I took this short yesterday on the Nasdaq. Also, if you're trading equities, trade the Nasdaq. Don't trade the ES. Yeah, we had that short. So I managed to get the short. Was able to get money from it before we before it properly blasted off. So as New York session opened, but essentially we had single prints there. Was taking the short position, invalidation if there was a close above, held on to it, took profit, stopped on the rest. And then I didn't trade New York yesterday. I probably won't trade New York today. But yeah, then if I do New York session, I tend to just do the initial balance. So just that first 1 hour. So you just sit at the computer for 1 hour, trade it. If you win, you win. If you lose, you lose. And then just shut yourself out. And that's another thing that helps to give really good balance to trading, is just know the times that you want to trade and do not trade outside of them. I can show you all what happens when you trade outside of the times you trade, because this happened to me last week. Okay, I got away with it. Where is it? Where is it? I can't find it. Did I upload anything on here? Yeah, here we go. So I had a day last week where I traded the initial balance. Okay. So you can see that was here. Traded that. Then after that had finished, I got greedy. I wanted to keep on trading. And I was like giving back everything. And then it was really pissing me off. So then it forced me to stay in front of the screen for another like 2 to 3 hours to try and find a trade to then make it back again. And I did manage to do it. I got away with it. But sometimes that doesn't happen. Sometimes if I overstay my welcome on the chart, sometimes I do, yeah. You do find that if you overstay your welcome, you can give back your profits very, very, very quickly. What strategies are you using for IB? So I use session liquidity. First thing will be like previous session highs and lows, daily highs and lows, gaps, liquidity, but also just scalping the order flow. And by that, I don't mean that you need to be looking at the order flow, like all of the like footprint charts and all of that. You can just see it from a candle, the way the candle starts to form. So I can drop it down real low onto like the low time frames. But it's like when you see shit like this, like you don't need crazy data to see order flow on a chart. You see a fucking big ass wick that goes like that, you can be like, okay, cool, I'm going to short the retrace. Yeah. It becomes like relatively simple and relatively intuitive. You see a big ass wick, oh, I can long if it drops into that. And then you just have the wick as your invalidation. But you trade when you get the big ass wicks. Yeah. And that's like kind of order flow. That's when you see excess. You don't trade this bullshit. All right. You don't trade any of that because there ain't no excess. That's balance. You trade when you get the excess, and it closes below. So yeah, that kind of thing. When you have like session highs and lows that are taken, I like to trade those. Like, oh, look, what did London do earlier? It swept Asia highs, yeah? Drop. And that kind of thing. So those are the things I look for. I keep it really simple. I'm just looking for excess on the charts when it comes to order flow. So when New York happens, like you get shit like this that happens, yeah? It becomes volatile, and you often find that it just drops into some kind of range that you can then trade the extremes of, and you can trade any excess that happens around that. And you can just scalp it. I'm like, generally speaking, I'll be in and out of a trade within a minute. So yeah, in and out of it within a minute. But it's pretty intense. You got to be in the right frame of mind to do it. And yeah. When I talk about trading, I start to enjoy it more again. It's quite good. It's a nice thing about doing these streams because I start to actually think it through. And and I do that kind of stuff. What's going on here? Do you have a ton of stats you've collected at your disposal? I have some stats. Yeah. I have some stats, and I know what tends to work, and I work off of stuff that is based in a theoretical way, right? But I don't necessarily, like, if I'm scalping, I'm not recording those trades. Yeah? Because you can't. Like, you can take like a ton of them, and you're in and out of them within like 30 seconds, 45 seconds. So I'm not recording those. I don't have stats. I just work on intuition. And I have good risk management that means that I'm protected if I kind of mess that up. So over time, like, I know I know the kind of win rate that I have when I'm doing that kind of thing, yeah? But I'm not recording my reasoning for it and everything. Now, there are certain things that I will trade off of. So if you're looking at the initial balance and you want to continue to trade, then that gives you can find things that give you a 90% probability for a trade. We have stuff within, we have stuff within like London session and for New York session that gives you 90% probabilities of something happening. I'm not going to tell you what all of those are. The crew knows what they all are. But there are stats that have been collected by people within the crew, not by myself actually, because I fucking hate stats. I don't have the time for them. I'm not a maths guy. I can't do them. I'll just like, that's the thing. Like, you gotta like enjoy doing something for it to be helpful for you. Like, if I start doing stats on all of my stuff, I'll just like be like, fuck trading, man. This is too much work. But other people do it. And that's great. But yeah, it's there's certainly things that I've built stats over time just by doing it. I'd rather just do it, let something journal it for me. So I've got my performance reports and stuff. If I've noticed anything that I need to do, I'll just journal into that. The great thing about trading, connecting it to a journaling software, if you're trading on Top Step, it journals everything for you. You've got all of your stats there. You can see what works. You can see what doesn't work. You don't have to do anything with it. And then you can say, like, you could literally go, hey, ChatGPT, here's my stats. Tell me how to improve or whatever. But yeah, I'll make little notes on it now and again. There we go. Cake said it as well. Yeah, with journaling, I like to advocate a discipline and psych-focused approach and letting the prop firm do the number crunching. That's it, yeah. Yeah. I don't do any number crunching. But I do look at the numbers that they've crunched. I will just go in. I'll fucking go in all guns blazing. If I mess up, it will tell me why I messed up. and then you can learn from it afterwards. I'm not going to go like, meh. I'll just trade what I want to trade. Okay, I think I'm going to wrap this up now. I've been talking for long enough. So, yeah, going to call it a day. And I'll see you guys again very, very soon. Maybe tomorrow if anything more happens. But we'll see. We shall see. This does look... Sorry, just straight off the... Before I go, that is now the SFP of the local low with the VWAP. Oh, VWAP's not quite here. A little bit lower before we can be looking at a bounce. But yeah, I mean, there's a little trade to be had here. Potentially long. Can be looking for slightly higher throughout the rest of the day. You could scalp that as a long right now. You could do. I'm not going to. It's too small. So yeah, I'll see you guys in a bit. Enjoy the rest of your day.